Hey everyone, welcome back to another episode in DIY Investing Education. Continuing on with the indexes, but we've done 3 episodes on 3 popular indexes in the US. Now let's cover Canada. So in Canada, one of the most popular indexes that covers the entire or the overall Canadian stock market, especially the large cap segment, the big companies, is the S&P TSX 60 index. So as you probably guessed, it's 60 companies. TSX, Toronto Stock Exchange, right? So these are the 60 biggest top big cap companies listed on the Toronto Stock Exchange. It is market cap weighted as well, which means the bigger the company is, the bigger the weight or percentage it will have in the index. And the way I like to look at this simply is the TSX 60, S&P TSX 60 rather, is kind of like the S&P 500 of Canada, except instead of 500 big cap of the biggest companies in the US, it's 60 of the biggest cap companies listed in Canada, Canadian companies. So in terms of ETFs, let's go over 4 of them by Global X Canada that really track the TSX 60 index. So the most classic basic option is you have the Global X S&P TSX 60 index ETF. So your classic index ETF, stock symbol, ETF symbol is CNDX. Now there are plenty of dividend stocks, right, in the Canadian stock market, and a lot of them make up these 60 companies, like the banks, insurance companies, energy companies, etc. And we'll take a look at the top 10 in the sector in a quick second, which means that even if you buy an index ETF, you will get some dividend income, some distribution yield, like it says here. So this ETF, as of October 10th, 2025, you have 2.63% annualized distribution yield paid out quarterly. And if we look at what's inside, everyone, what kind of companies, what kind of sector mix are we talking about for the TSX 60? Well, it's your classic Canadian exposures, the top 3 sectors in Canada in terms of sectors is financials, energy, and materials, right? So if we look at the top 10 holdings of the TSX 60, you'll recognize a lot of the companies: Royal Bank of Canada, Shopify, TD, Enbridge, Brookfield, Bank of Montreal, Anico Eagle Mines, which is a gold producer, Bank of Nova Scotia, CIBC, and CP Rail. So these are the top 10 companies as of October 13, 2025, out of the 60 companies in the TSX 60 index. So a great way to really, just like the S&P 500 in the US, the TSX 60 in Canada gives you really access to a diversified, as you could see here. Sorry, I meant to go to holdings. You could see here you have a bunch of sectors here. So diversified stocks in Canada, listed in Canada, Canadian companies. That is really the big cap segment, really the big companies. So your classic index-based ETF here for the TSX 60, you have CNDX, which is listed in Canada. You buy and sell it in Canadian dollars. They also have CANL. So CANL is the Global X Enhanced S&P TSX 60 index ETF. Like you probably guessed, like the others, you're going to have 25% leverage. So it's going to be the TSX 60 index with 25% leverage. So you have some more risks there, some more volatility, but also potentially amplified returns over time. So if you look at what it holds, it's very simple, everyone. Approximately 125% exposure to this ETF right here, CNDX, right? And when the market is having a really, really good year like we were having so far, I'm filming this, by the way, for the record, on October 14th. If we look at the performance of the TSX 60 index, for example, 1 year as of September 30th here, 2025, it's the return is 26.52%. But if we look at the enhanced one, where you have a little bit more amplification thanks to that leverage, you have a 1 year return of 32.18%. So you see where that leverage helps boost overall returns if the stock market is doing well. But of course, the opposite is also true if the stock market is not having a great time. And you could also notice that the yield is slightly higher as well on CANL because you have that amplification. And another note, something I found very unique about this one is that the distributions are actually monthly. So compared to quarterly for the regular index or classic index one. So just wanted to point that out. So if you strongly believe, for example, in the overall Canadian market for the next couple of years, and you don't mind a bit more, a 25% rather, more volatility, more risk, CanL could be a great choice. If you're an income investor like myself, covered call income investor like myself, you have CNCC, which is the Global X S&P TSX 60 covered call ETF. Like you probably guessed, it's the TSX 60 with a covered call overlay, right? If we look at the holdings, it's just going to have the Global X TSX 60 index ETF, and they're going to write covered calls, which definitely boost your income. You see that the yield as of October 10th is about 7.5% annually. And of course, they also have an enhanced version, a 25% leverage version of CNCC, which is CNCL. So exact same name, except there's enhanced in the name, right? The Global X Enhanced S&P TSX 60 covered call ETF. So you're going to get 25% more volatility, more risk, but definitely enhanced yield as well. You see that the annual distribution yield as of October 10th, 2025 is 9.19%. versus 7.5 for the unleveraged version. And both of these, by the way, CNCC and CNCL, have monthly distribution. So there you have it, everyone. That is the TSX 60 index, which once again covers the big cap segment of the Canadian stock market. In the next couple of episodes, we got 2 more episodes left to cover the biggest and popular indexes out there. We're going to look more for developed international in the next episode, and then we're going to look at emerging markets in the final episode of the indexes. So take care, everyone. See you in the next episode.